And hello to everyone. I am very happy to be with you today virtually. I'm Maria Akers, and since we aren't in person, feel free to send some energy our way through the chat feature. I'm coming to you from Omaha, Nebraska, and it is a beautiful fall day here. Our topic today is the FedNow service, and I'm going to give some background on where we've come from, and Jamie will pick up on where we're going. So I like to start broadly with the Federal Reserve's three mission areas. So the one most people think about is our role in setting monetary policy. And certainly that is the area that typically generates headlines and is our most visible role. But the Fed has two other roles that the general public is typically not as aware of, but given that we have a lot of bankers with us, you know our role as banking supervisors, which is to promote the safety and soundness of individual financial institutions and monitor their impact on the financial system as a whole. The other is the Fed's responsibility to provide and maintain an effective and efficient payment system, and that is where we will concentrate our discussion today. So next slide. All right. The Federal Reserve performs several key functions to maintain the integrity of the payment system. Since its founding more than 100 years ago, the Federal Reserve has played an operational role in support of our goal of an accessible, safe, and efficient U.S. payment system. That involves providing core infrastructure to move funds and information between financial institutions, so basically interbank clearing and settlement. The services that we offer include check processing, ACH, wire transfer, and I'll note that we offer these services alongside other private sector operators, which provides choice in the market. In addition, serving an operational role allows us to provide stability and support to the banking system, and in turn to the broader economy, visible in recent years, which is the role of the Fed as an advocate and change agent of payments improvement. So I think back at the beginning of my career with the Federal Reserve System. I was at the Atlanta Fed, and it was the early 90s. And one of my first assignments was to convert CH files to any of the bankers here, if that rings any bells. But I was the person that would come into your bank with my box of 3.5-inch floppy diskettes and an encryption card and install FedLine on your computers. So that's kind of a blast from the past. Another one that comes to mind is Check 21, which allowed check images to be used for presentment. Now I see somebody's been around that long in the chat. And you know, by being able to use check images instead of the paper checks, truncating the paper checks, that meant that we were no longer having to basically fly checks across the country every night. So definite efficiency gains there. So as the central bank, we are in a unique position to be a leader by bringing payment stakeholders together and offering a space for discussion and collaboration, which is how our most recent payment improvements journey began. So next slide. So more than 10 years ago, the Fed saw that the payment system was at a critical juncture in its evolution. So if you think back, there was lots of innovation going on with technology, right? We had high-speed data networks, ever more sophisticated mobile devices that we're able to do so much on, as well as a general change in the nature of commerce. Lots more online shopping and end user expectations. So basically people got used to things being quick and easy, and they wanted payments to be the same way. So the Fed recognized that there were gaps between the capabilities of our traditional payment methods and the growing demand for fast, convenient, and secure payments. So that's where faster payments come in, so that funds can be sent and received immediately. And that's 24/7 by 365. So before I give a quick recap of the Federal Reserve's faster payments journey, I have a polling question for you. So, how familiar are you with faster payments? Not at all? Slightly familiar? Somewhat familiar? Or very familiar? Is everyone able to see the polling question? Oh, here we have some results coming in. It doesn't look like everyone can see it looking in the chat. Okay, I see some folks being able to see the results. So I will go ahead and recap the answers. So we have 15% saying not at all familiar, 32% slightly familiar. Our highest category is somewhat familiar at 38, and then 15% very familiar. So we have a good bell curve here, and hopefully at the end of our presentation, you'll know even more. So we'll go to the next slide. So now I'm going to talk about the Federal Reserve's faster payments journey, which is 5 years. So in September of 2013, the Fed offered perspectives on key gaps and opportunities in the U.S. payment system and solicited industry feedback in a public consultation paper. So you'll see that there's going to be a common theme on this slide where we ask for industry feedback, and I will say we are never disappointed in the response that we get, because we get a lot of feedback, and a majority of it is from the banking community. So in response to the feedback to the public consultation paper, we were able to author our original Strategies for Improving the U.S. Payment System paper, and we affectionately call that our SIPS paper. And that was really a call to action to the industry. It identified 5 desired outcomes for the U.S. payment system around speed, security, efficiency, international payments, and that was all underpinned by industry collaboration. So again, going back to this leader catalyst role of the Federal Reserve. So to support those outcomes, the paper proposed a variety of strategies, but I am going to focus my remarks on the faster strategy primarily. So to collect broad industry perspectives, the Fed convened 2 task forces, the Faster Payments Task Force and the Secure Payments Task Force. And these task forces, we asked for volunteers, and we received an overwhelming response and ended up with a very broad and inclusive group of stakeholders. So we had representation from organizations across the payments community, so obviously financial institutions, but also non-bank payment providers, payment processors and operators, businesses, consumer groups, government agencies, regulators, standards bodies, industry trade organizations, consultants, and academics. And this was great because we felt like all of these voices were really needed in the conversation. And so we ended up with more than 300 members as part of the Faster Payments Task Force. And they met over a 2-year period. So I'm curious if you participated in either of the task forces. Please let us know in the chat. So after much discussion and analysis and consideration of a variety of viewpoints, the Faster Payments Task Force wrote a final report, which included 10 recommendations for implementing their vision for a safe, ubiquitous, faster payments capability in the United States. And 2 of those recommendations were for the Federal Reserve. So, oh, I see somebody. I see someone that participated in both the task forces. So we did our, so the task force asked the Federal Reserve to develop a 24/7/365 settlement service to support faster payments, and also to explore other operational roles that we might perform in support of faster payments. So the Federal Reserve, we did our own analysis of what that might look like, and we issued a Federal Register notice in 2018, once again asking for public comment on potential actions that we could take to offer a real-time gross settlement interbank clearing and settlement service. We received over 400 comment letters, again, from a variety of stakeholder segments across the country, and they were actually signed by more than 800 organizations. And as part of my job, I got to read every single one of them. And so let's say if you wrote a letter to us, why don't you let us know in the chat. So these letters were largely in support of the Fed offering such a settlement service. All right, First Bank. This time, so in 2019, the Fed announced it would build the FedNow service. And again, asked for comments on its features and functionality, because we wanted to hear from the industry, what were their priorities? What did they want the service to look like? How would it work well for them? So this time we received almost 200 comment letters, again, read them all, and considered input from those, as well as additional industry discussions. We looked at best practices of other central banks that operate instant payment services. And we did the board's own analysis to come up with a description of the FedNow service, which was announced just this past August. So now we are down to the last dot on my slide, showing the target launch date of the FedNow service, which is 2023 or 2024. So that is a very quick recap of our efforts over the last 10 years or so, and that's going to bring us up to where we are today. And I will now turn things over to Jamie Champlin to give you more details on the FedNow service.
All right. Well, thank you, Maria, for that great overview of our faster payments journey. Now let's dive more specifically into the FedNow service, including what you can expect and how you can also get involved. So if you want to advance to the next slide. As Maria explained, the rapid evolution of technology really presented a pivotal opportunity for the Federal Reserve and the payments industry to modernize our nation's payment system and establish a safe and efficient foundation for the future. So we are developing FedNow to enable financial institutions of every size and in every community across America to provide a safe and efficient instant payment service in near real time, around the clock, 365 days a year. So maybe let's talk a little bit about instant versus faster. If you've been listening closely, you heard Maria talk about our faster payments journey, and now I've changed the terminology a bit to instant. So let me clarify. Faster payments tends to be a broader term that we use that can really be applied to many different payment mechanisms that have gotten fast or increased the speed of a payment. We use the term instant to differentiate FedNow because of the immediate interbank settlement that occurs with FedNow. So it is a slight nuance, but just wanted to explain while you're hearing me talk about instant payments when describing FedNow. And maybe if I can get a thumbs up in the chat or a response just to let me know that makes sense, that'd be great. So when we think about instant payments, how does that benefit consumers and businesses? An instant payment service, again, which is the immediate transfer and settlement of funds, day and night, weekend and weekdays, has the potential to become widely used and yield significant economic benefits for both individuals and businesses by giving them more flexibility to manage their money and make those time-sensitive payments. For small businesses, the ability to receive payments immediately may result in better cash flow management, More broadly, instant payments may provide businesses with a considerable opportunity to improve efficiency and reduce costs of payments relative to paper checks or other existing payment methods. For individuals, the ability to both send and receive payments more quickly may help alleviate those mismatches between the time that incoming funds are received and the time that spending needs to occur. This improved ability to manage your money can enable some individuals to avoid those high-cost borrowing and penalties such as overdraft or late fees. And no doubt the COVID pandemic that we're currently in really further underscores the need for instant payments in order to move money quickly and allow for that immediate access to those funds. So I'll pause here to do another quick poll question for the group. Okay, so if you are a financial institution, are you seeing demand for instant payments? Not yet, yes, a modest amount, yes, a moderate amount, or yes, a significant amount? Give folks a chance to respond. Okay, so hopefully, if you can see the results, it looks like yes, a modest amount is the highest response. We've got 25% not yet, 36% at a modest amount, 31% at a moderate amount, and 9% at a significant amount. So thanks for your responses on that. And if we want to go ahead and advance to the next slide. So the Federal Reserve marked a key milestone in the development of the FedNow service with the announcement of our service's features and functionality. As Maria noted, the features were informed by over 182 stakeholder comment letters in response to our August 2019 Federal Register notice. We also had additional discussions with the industry. We considered the experience of other central banks that operate instant payment services, and we conducted our own analysis. So the FedNow service design incorporates all of this stakeholder input and reflects goals that align with our public mission of accessibility, safety, and efficiency. So those three areas that Maria highlighted earlier. Our goal is to bring FedNow to market as quickly as we can. So we are taking a phased approach. Our initial release will include core features for a clearing and settlement service, as well as some value-added features and functionality to support a range of transaction types and use cases. Additional releases with more features and enhancements will follow quickly on an iterative basis. And we believe this phased approach will allow for adjustments and improvements in response to industry needs or changes in technology. I would just want to iterate that implementing the FedNow service as soon as possible remains a high priority for the Federal Reserve. And thus far, we've been fortunate that the pandemic has not negatively impacted our progress. While our target release still remains 2023 or 2024, we do intend to announce a more specific timeframe for launch once additional development work is completed. So now let's jump to the next slide and really look more specifically at the features. Okay, we'll start with accessibility. This first release of the FedNow service will foster nationwide reach of instant payments and provide added functionality to help financial institutions manage that transition to 24/7 by 365 operations. The Federal Reserve's broad reach, based on the connections and customer service relationships we have with more than 10,000 diverse financial institutions across the country, will support a nationwide infrastructure for instant payments through the FedNow service. Features that will support flexible adoption of the FedNow service include support for banks' use of agents and correspondents, much like you do today, as well as an option to enroll as a receive-only participant. The Federal Reserve will adopt a 7-day accounting regime for FedNow, but banks are not required to do so. Also, FedNow will provide reports and support reconcilement and other processes that are in line with the internal accounting regime of participating banks. And lastly, we also heard from stakeholder feedback about the importance of interoperability to help advance the nationwide reach of instant payments. To support this goal, the service will use the widely accepted ISO 20022 standards and adopt other industry best practices, which would remove barriers to interoperability. Okay, we'll jump next and talk a bit more about safety. The FedNow service is designed to provide a safe payment infrastructure for instant payments with features to support payment integrity and data security. We heard from the industry about the importance of tools to combat fraud, and those tools will be offered at the launch of the FedNow service and augmented and enhanced over time. So tools available at the launch will include a transaction value limit for all FedNow transactions and the ability for participating banks to set lower value limits, the ability to specify certain conditions under which transactions would be rejected, such as by an account number, and reporting features, including reports on the number of payment messages that were rejected based on our participants' settings. Lastly, by operating alongside the private sector instant payment service, the FedNow service will promote resiliency in instant payments by allowing banks to connect to more than one service for contingency purposes. All right, we'll move on to efficiency next. So this first release of the FedNow service provides, again, core clearing and settlement capabilities to support a broad range of transaction types and use cases. Banks and their service providers will be able to use the FedNow service really as a platform or springboard to provide innovative instant payment services to customers. At launch, these services include a request for payment functionality that could enable bill payment use cases, and the ability to include information about a payment, such as bill or invoice information, along with the payment, which could support B2B use cases. Next, given that the instant payments involve payment by payment settlement between banks on a 24/7 by 365 basis, the Federal Reserve recognized the industry's concerns about having adequate funds in their Federal Reserve accounts to settle instant payments on weekends and holidays. To address these concerns, the FedNow service will include a liquidity management tool that will allow participants to transfer funds to each other in support of liquidity needs. The tool will also be available to participants in the private sector instant payment service, allowing them to transfer funds between their Federal Reserve accounts and the joint account that backs the settlement in that service. Additionally, access to intraday credit will be provided for participants in the FedNow service during its business day under the same terms and conditions that are available for our other financial services today. And finally, the FedNow service will provide banks with choice in instant payment services, generating that competition that can result in efficiencies related to pricing, service quality, and innovation. So that's a high-level summary of the features and functionality for FedNow, and I'd like to pose another poll question to the group. Okay, so hopefully folks can see this. Which use case do you anticipate will benefit the most from instant payments? We've got person-to-person, such as paying family and friends, business-to-business, such as paying suppliers or vendors, business-to-person, such as payroll or insurance disbursements, person-to-business, such as e-commerce or point of sale, or other. We'll give folks a minute to respond. Okay. Well, the results are up. Hopefully you can see them. I'll walk through them, and we're a little bit, I would say, more evenly dispersed. So this is good insight. So 27% say person-to-person. So when you're paying, family and friends. 31%, so the highest response is business-to-business, such as paying suppliers or vendors. That doesn't, I will admit, that doesn't surprise me, given a lot of that business we know is still conducted via check. So that's good. 18% for business-to-person, such as payroll or insurance disbursements. 23% for person-to-business, so again, e-commerce or point of sale, and then 1% for other. So appreciate the response. That's helpful insight for us. Okay, so if we want to advance to the next slide. As you've heard a bit about our features and functionalities at our first release, thought it may be helpful to walk through a simple FedNow payment flow that, again, will take place in a matter of seconds. So in step one, a sender, who would be an individual or business, initiates a payment by sending a payment message to its financial institution through an end user interface that's outside the FedNow service. The sender's financial institution is responsible for screening the payment according to its internal processes and requirements. That's the first step. Then in step 2, the sender's financial institution submits a payment message to the FedNow service. In step 3, the FedNow service validates the payment message, and this could be, for example, by verifying that the message meets certain format specifications. And then in step 4, the FedNow service sends the contents of the payment message to the receiver's financial institution to seek confirmation that that receiver's financial institution intends to accept the payment message. At this point, the receiver's financial institution will have the opportunity to either confirm or deny that it does maintain the specified account. Okay. Maybe give me a smiley face in the chat if you're following along. Okay, then we'll move along to step 5. And this is when the receiver's financial institution would send a positive response back to the FedNow service, confirming that it does intend to accept that payment message. And really, steps 4 and 5 are intended to reduce the number of misdirected payments and resulting exception cases that can occur in high volume systems. Okay, then in step 6, the FedNow service debits and credits the designated master accounts of the senders and receivers' financial institutions, or it could be their correspondent financial institutions. In step 7, the FedNow service sends a payment message forward to the receiver's financial institution with an advice of credit, and in parallel, it's sending an acknowledgement to the sender's financial institution, notifying it that the settlement is complete. Then finally, in step 8, the receiver's financial institution credits the receiver's account. As a term of the FedNow service, the receiver's financial institution must agree to make those funds available to the receiver almost immediately after step 7. This crediting of the receiver's account as well as the debiting of the sender's account by their respective financial institutions does happen outside the FedNow service. So again, that's a high-level overview of a simple payment flow. Again, all of this is happening in a matter of seconds and seems very simple, right? But that's what we wanted to highlight for you, just to give you a sense of how we expect the messaging to work. So that really wraps up the overview of the FedNow features and functionality. And I will kick it back over to Maria to really talk about ways you all can stay engaged and educated and get involved in some of the efforts.
All right, so yes, preparing for the FedNow service. So before I get started again, I have a couple more polling questions for you. So where is your organization with regards to instant payments? Not interested right now, thinking about offering instant payments, actively preparing to offer instant payments,
or already offering instant payments. And then there's another question. If you do plan to offer instant payments, what is your implementation timeline? We're already offering instant payments, 1 year, 2 years, 3 years, or more than 3 years. Okay, we have our results. So a few of you are not interested right now. Might have been some of the folks that aren't seeing demand quite yet. But the large majority, 56%, are thinking about offering instant payments. Looks like 20% are actively preparing, and I'm pretty impressed. 18% are actually already offering instant payments. And then of those that answered the second question, if you plan to offer instant payments, what is your implementation timeline? So the folks that are already offering are 23%. 1 year is 29%. 2 years is 33%. And I think that actually aligns with some of the things that we've been hearing from the industry about how long it sort of takes to get your systems ready and make those investments. And then more than 3 years is 3%. So thank you for answering those polling questions for us. And now we can go to the next slide.
So to help with your instant payment strategy, we've launched an instant payments education page on our frbservices.org website, where we will regularly be posting new content. So there are already several resources out there, and I encourage you to bookmark that and check back often to learn more. Next slide. So as we proceed with the development of the FedNow service, we will continue to engage the industry to gain input on the service features and design. So in May, we announced the formation of the FedNow community group for industry stakeholders interested in providing insights to help inform and evolve the development of the service. And we are very pleased that we already have over 700 members. So raise your hand in the chat if you're one of them. And if you're not and would like to join, make sure to submit a participant profile form. Members of the FedNow community may be requested to provide input on the design and features of the service, the product development roadmap, industry readiness or barriers for onboarding and implementation. And we're going to get your insights via a variety of channels. We're going to have focus groups, working groups, conference calls, virtual meetings, surveys, but you can really determine how involved you would like to be. So it's fine if you just want to sign up to get information that we send out and attend our webinars. Working group formation has already begun. The ISO 20022 working group kicked off in July to inform and refine the FedNow ISO 20022 message specifications that Jamie mentioned. And the reconcilement work group is made up of large, medium, and small financial institutions and third-party processors who handle reconcilement on behalf of their customers. And that will support the planning and design work to facilitate FedNow service reconcilement activity. We'll also be establishing a FedNow service pilot program and testing approach. We expect the first phase of the pilot program to begin in the near term with financial institutions and service providers serving in an advisory capacity as we work through the operational details of the service. So there are lots of exciting things happening in the community if you're interested. And on the next slide is a recap of where you can go to learn more. So it looks like we do have some questions, and I will go ahead and read the first one that I'm seeing in the question and answer section here. If we settle our cash letter through a correspondent, will we lose the use of some of the tools you mentioned, especially liquidity? So no. When you know, the way the service is designed, that any kind of relationship that you have with a correspondent bank, you should be able to continue that through using the FedNow service. So Jamie, I'll invite you to join back in.
All right, well, I see another question that will respond. Do you view this as primarily a B2B solution and or a direct competitor to consumer products such as PayPal, Venmo, etc.? Again, that's a great question. You know, we're really viewing FedNow to be that platform for innovation and are intending for it to be use case agnostic so that it really can support all of those different use cases that we talked about earlier, P2P, B2B, B2C, etc. When you talk about things like PayPal, Venmo, those of course are those end user apps that folks use. So it would be the financial institution would be providing those end user interface type apps to all of us as end users. But again, the intention is that FedNow would serve as that platform for those different types of use cases.
I saw we had a question. I thought we had a question about at what point does the Fed debit the sending institution? And if looking at the FedNow payment flow, it would be after the receiver's financial institution sends confirmation to the FedNow service. That is when the master account is debited from the sender's bank and then credited to the receiver's bank.
And I might jump in. I know I'm keeping an eye on time. I know is there a chance the service will be launched sooner than 2023 or 2024? And as I mentioned earlier, we did hear, from the industry about the urgency for time to market. So FedNow is a priority for us. As you can imagine, it is, a complex undertaking. So we are doing everything we can to advance it as quickly as possible. And we will provide updates to our industry experts and ecosystem through just our regular updates. So more to come on that. I see a question, and sorry, these are coming in quickly, so bear with us, about a directory. I think I saw a question maybe. Plans to have a directory service. So that is one of those value add services that we are currently exploring. That will not be a part of our first release, but again, understanding the use cases that it could support, that is part of our exploration for potential future releases of FedNow.
And I saw a question about, is there a push to have interoperability with the clearinghouse's RTP? And I know that Jamie touched on this in her description, but we recognize the importance of interoperability in instant payments. We received a lot of comment letters regarding that after our August 2019 Federal Register notice, and the Fed is committed to advancing interoperability to achieve nationwide reach, which is really the goal for faster and instant payments. And it's going to really, take everyone working together to achieve that goal. And we are, as Jamie mentioned, building towards compatible standards using the ISO 20022 messaging to enable, interoperability through a routing model.
All right, well, I see that we are at 12:44, so I will jump in, and I want to say thank you all for joining us today for an update on FedNow as part of our Banking and the Economy webinar series. And on behalf of the Federal Reserve Bank of Kansas City, thank you and enjoy the rest of your week. Have a good day, everyone. Goodbye.